Welcome back to Business on City News 570, powered by Cowan Insurance. And as God would have it, we are joined by Steve Price. He is a sales consultant in the retail and group area at Cowan Insurance. And Gregory, one thing, and you always mock me, is that we need to have more discussion about car insurance because you keep thinking I get into accidents, which I don't actually. But we wanted to maybe have Steve on this week and next to talk about auto insurance, because most of us have a car or we have a business that has vehicles. But on a personal side, it's important for us to understand auto insurance and how to know the risks and manage the cost. Those are important things for us.
Okay, Steve. Ian is absolutely correct. You're going to need to have a little bit of patience this morning because you are dealing with an individual that doesn't, know everything, in spite of the fact that he thinks he knows everything. But so what I want you to do is I want you to give us kind of the basics. When I always think of it this way, when you've got maybe an individual who bought their first car or just moved into the country or the province, what are the things they need to be thinking about before they even consider buying that car and reaching out to an insurance broker? What are the 101s of auto insurance?
Well, these days, everyone's feeling the pinch. So the biggest thing for people buying insurance is price, right? So if you're buying your first car, a lot of people are going to want a brand new vehicle. We're quoting a lot of brand new vehicles for first-time drivers, and the premiums can get pretty high, obviously. Now, with a brand new vehicle, you're going to have full coverage. Chances are there's financing and leasing on that vehicle. But the bare minimum coverage in Ontario is liability. So you have to carry 1 million liability, right? I would always recommend 2, just for the amount of lawsuits we see nowadays. The difference in premium between 1 and 2 million liability is not much at all. We're talking $50 for the year, maybe, depending on the company. Some companies might be a little bit higher, but it's not much for that extra million. So as a first-time car buyer, if with no prior insurance, that no prior insurance makes a major difference in the premium. So the first year is always going to be high, right? But driver training is important. It's important to get your G license as soon as you possibly can, because if you stay at a G2, which you have 5 years to go from your G1 to a full G, if you stay at a G2, you're not going to see decreases year after year, even though your experience is growing. G2, you're staying at a driving record 2 or 3, and it's not going to get higher. So when you get your G license, you get that graduated licensing discount, which adds 10%. And year after year from there, your driving record's going to increase. So that's going to help your premium. I mean, people, they're set on what car they want to buy. So there's not really much you can do about that. But, add the snow tires, right? If you got to disclose your commute, if you're working from home, that can save you a bit of money. So there's little things like that. And it all really depends on the vehicle you're buying. If you're only spending $500 on your first car, you might just want liability only because your deductible is probably going to be $500.
Yeah. Now right? Listen, Steve, we got about a minute left, but I think that's an important element. You talked about a variety of things that even before you buy your car, like getting your license when you're 16 or 17 and getting your G2 or G1, G2, and then getting your G1. When you do buy a car, there's an immediate impact on what your cost of insurance is going to be. But I want to go back for a second as like saying I'm going to get the sports car because that's what I've saved up for. You better do some thinking before you buy that car to realize whether you can afford the gas, which is probably premium gas on a sweet car, but also the insurance, because it's every month and you ain't driving the car unless you can afford the insurance.
Exactly. And if someone were to get a cancellation for non-payment, they get their dream car, they're paying $400 or $500 a month, especially as a new driver. If you have a cancellation for non-payment on record, you're not finding anything even close to that $400 or $500 a month after your policy cancels. So that's important. If you're going to put yourself in a bind because of these insurance payments, I would highly discourage against purchasing that vehicle simply because a cancellation for non-payment, it's worse than a ticket.
Yep.
And some companies, they may not even take it. Your options are limited at that point.
Yeah, for sure.
Listen, we're going to have you back next week because there's some more detailed, specific things that people should hear about. But Insurance 101 is more difficult than I would have imagined. I thought it was going to be an easy course. Steve's making it or telling us that it's more complicated than we thought. Listen, we'll have you back next week, Steve. We've been joined by Steve Price. He's a sales consultant in the retail and group area at Cowan Insurance Group.